seen months of growth in the economy, but North Carolina's economy may be slowing down. An NC State index that forecasts the economy shows an economic pullback in May. The index tracks national indicators, building permits, manufacturing hours and earnings, and unemployment claims. Building permits are down 14% month over month, and initial jobless claims increased by more than 30%.
Well, these numbers are raising questions about whether this pullback could lead to a recession, and maybe not if, but when. Joining us now to talk about it is NC State economist, former NC State economist, because we know you're retired, but you do still author a report. Mike Walden, Mike, this is the largest downturn we have seen in more than a year, but North Carolina's economy is still stronger than it was a year ago. So is this something that we need to worry about?
Well, first, thanks for having me on the broadcast. It is something we should worry about. I developed this index over a decade ago to try to give us some insight into where the economy is going. It's a leading indicator index, very much like what we have at the national level. And in the latest measure of this, which was for May, data for May, we did have a very large decline, in fact, the biggest decline in over a year. And if this index is telling us what we think it should tell us, what that translates into is a much slower economy for North Carolina 4 to 6 months ahead. Does it mean a recession? Not necessarily, but it does suggest a slower economy.
Well, really, we're already seeing that too, Mike, because we've seen the housing market explode in the Triangle in the last year, but now we're seeing the building permit numbers slowing down. How much of that is influenced by those rise in interest rates? And should people looking to buy or build or sell a home be concerned?
It's all about the interest rates, and the Federal Reserve actually is behind this, and they want this to happen. They want the economy to slow down, all parts of the economy. Yes, if you are looking to buy a house and you've locked in on a house, you qualify, go ahead and borrow the money now, because I think interest rates are going to go up much more. The Fed is not done. Contrary-wise, if you're trying to sell a house, you may want to hold off until all this settles down. So the housing market will definitely be impacted by what's going on in Washington vis-a-vis the fight against inflation.
You have been studying this area for such a long time. You know, usually when it comes to jobs in our area, we are really booming, but we're now seeing those rising unemployment numbers that show that maybe that may not be the case going forward. Those jobs may be fewer and farther to come. So is this a sign of what we should expect in the future?
It is, and you're absolutely right. The Triangle, and in fact, North Carolina as a whole, has been an economy that's been growing faster than the nation. But we are part of the national economy. And so if we do have a national recession, and recessions are termed to be national, we will feel the impact. Now, hopefully we will not feel the impact as badly here in North Carolina and in the Triangle, but we will feel the impact. We will likely see a rise, for example, in unemployment, because we are interconnected with everything else. And so, yes, I advise everyone I talk to, business groups, et cetera, have in your back pocket a plan for your business if we do have a recession, because I think there's probably a 50-50 chance right now that we're going to have a recession later this year or into next year.
So what would be the benchmark to consider that the economy is in a recession, and how close do you think we are to that point? I know you said it's a 50-50 chance we're going to get there.
Yeah, well, recessions are not officially declared until well after they begin. And what they focus on is something called gross national product, which is simply the aggregate of everything we produce, goods and services in the economy. You can get readings, for example, the Atlanta Federal Reserve is a very good place to go. They track this monthly, so I'd recommend that to get a heads up. But I think people in general will feel if a recession's coming. They'll see that the hiring ads are not there. They'll see that maybe a business is postponing expansion. We will have their hours cut back. So I think there are a lot of indicators you can look at, and I think we'll know if things slow. And of course, if they slow dramatically, we'll know if it's a recession.
Like you said, it's always, we got to look back to see if it actually happened. I don't envy you. Your job is not easy, but Mike Walden, you always do such a great job of explaining this. So we really appreciate your time.
Thank you, Deborah.